The only time I like to use the word bear market is when I refer to crude, because crude is down 20%. Crude falls another 4-5%. Officially, it will be in a bear market. The ring of bear market is always a bad ring to hear, but oil in a bear market, I think it's an excellent ring to hear. Vanda Harino joins us to take cognizant of why oil prices are in a decline. Vanda, is it all about trade war, or oil is in a bear market and it will remain in a bear market? Markets will find a reason to pull oil prices down, but fundamentally there is a demand mismatch, and which is what we need to be cognizant of.
Good morning. It is about the trade war, and it is about increasing concerns about demand growth this year and perhaps next year as well, turning out to be rather anemic. Now, obviously, it's very hard for anyone to connect all the dots between the economic headwinds that we are seeing and have certainly increased since last week, and between global oil demand growth. And nobody is expecting it not to grow this year. But the safest position for now turns out to be in the oil markets to be on the short side, to assume that growth will be way poorer than, let's say, what it was in 2018.
Right. Vandana, how do you see this, panning out for the prices? Because post the last set of meetings, there were certain decisions made with regard to the production cuts. They were holding them steady, assuming that things would perhaps, rebound towards later in the year. How do you see the current range of factors impacting prices going ahead? I know you just said that perhaps better to look at it from a short perspective. How deep do you see that level falling?
Yeah, so if you look at Brent, which is really the true benchmark representative of the global oil supply-demand balances, it slipped below the key psychological mark of $60 a barrel. It's in bear territory, and it has essentially now around $58, $59 levels. It is very close to where it was at the start of this year, around in early January. And what that essentially tells you is that the entire jump in Brent that we saw all the way to the April year-to-date high of $74 was because of optimism over U.S. and China putting their trade war behind them. And essentially what has happened now is that entire optimism and that entire bump in Brent has been removed. So basically, as far as the oil market is concerned, it is not expecting the economic headwinds as a result of the trade war to disappear anytime soon, certainly not in 2019. And of course, there's a lot of monetary easing action that has been going on from the Fed, ECB expected, major central banks around the world, and India included, of course. The interesting divergence between the stock markets and the oil that we have seen since early May is that oil is not taking much hope from this easing being able to restore global economic momentum. So I expect the pressure to very much remain on oil, the bearish pressure to continue as long as the U.S. and China remain locked in this, what seems to be a worsening trade war with each day.
Vandana, great to have you on the show. Thank you so much for taking the time out and talking about crude.